Robinhood, who's been moving towards their IPO coming up on the horizon, has been in a lot of trouble with various agencies recently. Today we're going to take a look at what that means for the users as well as for the company going forward. Welcome back to the channel, family. My name is Trey, getting in touch with you from Japan. On this channel, we typically look at stocks and investing related news. On our secondary channel, we look at entrepreneurship, small business, mindset, growth, and things like that. We share a lot about our story about how we've been growing our businesses here in Japan. And so today we're looking at Robinhood, the rapidly growing, very much young, new investor-centric app, which has grown to huge popularity. They've topped 13 million users already. And I think the first third of this year alone, they added on another 3 million users. And it's kind of become the default brokerage for a lot of young new investors. What really put them on the map was commission-free trading. Basically, in the past, you would have to pay, basically, the further back you go, the higher commissions were. It used to be like 20 bucks per trade, even if it was just one $1 stock. Recently, typically, you'd be paying 3, 4, 5 bucks per transaction. But Robinhood busted onto the scene and was like, we're gonna make it free. And that actually prompted a bunch of other big brokerages like Schwab, TD Ameritrade, E-Trade to follow suit, which has ended up helping kind of the whole industry. But actually, in some ways, users who are paying free commissions are actually paying in some other ways behind the scenes, which Robinhood hasn't necessarily made clear to its users, which has been getting them in trouble. Interestingly, even though Robinhood is one of the smaller brokers with a shorter history, there have been a few days this year where apparently they posted higher trading volumes than any of the other big brokerages. And you're probably also familiar with a bunch of the drama that happened in 2019 where Reddit users, Wall Street Bets, go figure, basically he put in a $4,000 deposit, and taking advantage of certain loopholes and the logic in the Robinhood system and the way they do their settlement, he put in a $4,000 deposit and was able to leverage more than $1 million. And so for a lot of people, that got Robinhood kind of into their mind. And I think it didn't work out well for that Robinhood user who ended up leveraging basically the infinity money hack. But there have been a lot of people who are like, dude, I can control that much money using options and leverage with only like my $1,000 or $5,000 deposit. That's awesome. I want to get in on it. That whole event also prompted a bunch of drama. But after that, we also started to see more and more pressure from regulators talking about like, dude, Robinhood is like way too fun and easy and gamified to use in a way that makes trading responsible. You've probably already noticed that a lot of the other more traditional brokerages, websites and apps are very just kind of like, I work in a cubicle and I do investments type thing, where it's just like not very fun looking, you know? Robinhood, on the other hand, has made it very fun and easy and graphically pleasurable to use, but also therefore has drawn, you know, criticism from more traditional regulators who are kind of like, investing is real, and if you screw up, you can destroy the rest of your life. You shouldn't be appealing to young people who don't understand this yet. So in this most recent article, check it out, CNBC has provided this information. Basically, the SEC, Securities and Exchange Commission, who is the regulating authority over all brokerages, has charged Robinhood with misleading their customers in how Robinhood itself makes money. People have often asked, like, dude, if there are no commissions on Robinhood, how is Robinhood making money and why is this worth all of their time? And also, interestingly, Robinhood, the whole concept of Robinhood was the guy who steals from the rich or takes from the rich to distribute wealth to the poor and help out the poor who are struggling. And it's kind of ironic because Robinhood makes a big chunk of their income and their revenues from sending deals over to market makers or larger brokerages who then go on and complete the transactions for Robinhood's users. So there's this thing called payment for order flow. Basically what happens when you're using the Robinhood app is Robinhood doesn't take, like, let's say Bob puts in one order for a Tesla share. They don't immediately take that over to the brokerages that they partner with to do the transactions. Because Robinhood has so much volume, they'll come and get Bob's and Charlie's and Steven's and Mary's and millions of other orders for Tesla stock all happening at the same time around the world. And then they'll take those packages over and say, hey, market maker, please do this transaction for us. And then that market maker, because it's such a huge bulk order, similar to buying at Costco, because it's such a huge bulk order, they end up getting a really, really slight advantage. And they pay Robinhood a fee for that big bulk order. And that whole process is called payment for order flow. So that market maker is saying, hey, Robinhood, thanks for these thousands or millions of stock trade orders. We're going to go ahead and put it through now. And that's how Robinhood makes a lot of their money. But the tricky thing for the user is that typically if you say, I want Tesla at $650 order, if you're using a more traditional brokerage, as so long as Tesla is less than $650, you hit order and then it goes cha-ching, transaction done, it's finished. But one of the really crazy things about the stock market and the way transactions happen is that even 1 millisecond or 50 milliseconds or a couple of seconds can make a big difference in what's happened in that price action. And so when Robinhood is compiling this whole palette of orders from Bob and Mary and Charles and Stephen from around the world, you're losing milliseconds. And then they have to send it over to that market maker who then goes and makes the transaction. And so in some cases, normally, Charles, who's making this order for a Tesla share, might be paying $3 or $4 or $5 commission to a traditional broker. In that time that Robinhood is compiling all these orders to send it to the other market maker who makes the transaction, the price of the individual stock or share could have changed so much that it's costing Charles more than that $3 or $4 or $5 that it would cost at a traditional brokerage. And that works out to be, especially if you're dealing in single shares, a much bigger cost to overcome to, eventually switch over into profit. And so this whole payment for order flow process isn't illegal. It's not a bad thing. And actually a lot of other brokerages, especially electronic only brokerages, do this. It's not a new thing. But I guess the issue has come up in how Robinhood has not really been super forthcoming to their users about all of that. Robinhood also offers a service called Robinhood Gold, which you can pay a few bucks a month. I think it's $9 a month or something like that, to get access to more leverage or be able to put in bigger deposits or things like that. And so I think a lot of the people assume, oh, Robinhood Gold is how Robinhood makes their money. But actually this whole payment for order flows thing is a big source of their income as well. In a filing with the SEC, in the second quarter of this year, Robinhood made more than $180 million just for payment for order flows. So after the SEC filed this complaint against Robinhood, Robinhood turned around and said, okay, we'll pay the fine, $65 million, here you go. We're not necessarily admitting guilt, but here's our money, please leave us alone for now. Robinhood has also gone on to say that, we're changing our verbiage and our terms of service and, that reflects the old Robinhood. The new Robinhood is different. So all of this comes while Robinhood is preparing to IPO. They've been doing fundraising for years actually, but just this year they've raised about $1 billion to continue to build up their company and move towards IPO. So $65 million fine isn't necessarily going to end the company or something like that. But one of the tricky things with private companies before they go public is that we can't just look at all of their books and we don't have access to all of the figures. So for a small fledgling company, every cent actually matters. Whether they're putting it into R&D or marketing or other different avenues, all of a sudden having a $65 million fine can be actually quite a big deal. And so this whole thing transpired a day after Massachusetts actually filed a complaint against Robinhood as well, saying, dude, your app is way too fun and way too gamified. This is dangerous for young investors who don't really know what they're doing. They accuse Robinhood of failing to act in the best interest of their users. The complaint cites Robinhood's aggressive tactics to attract inexperienced investors, its use of gamification strategies to manipulate customers, and its failure to prevent frequent outages and disruptions on its trading platform. And that article goes on to mention the whole, unlimited free money hack thing that happened on Reddit last year. But regulators are basically coming down really hard on Robinhood and saying you can't be doing this. It's not a game. A lot of your users might not really know how much they can destroy and screw up their life by making just one little fun click. So we're seeing a lot of drama and a lot of growing pains for Robinhood as they're trying to, and in some ways have revolutionized this whole make investing fun and let's get started on preparing for our future young people type market. And Robinhood responded to this SEC suit saying, we are fully transparent in our communications with customers about our current revenue streams, have significantly improved our best execution processes, and have established relationships with additional market makers to improve execution quality. So Robinhood is saying, actually, we're always improving our processes in regards to these things that you guys are attacking us on, and they're still moving towards their IPO. I think it'll be really, really interesting to see if the order execution actually gets faster, and we can see things like price improvement or quicker turnaround times on ordering. But I'm also really interested as an investor in companies, as an owner of companies, to see how this will affect Robinhood's bottom line, especially as they're moving to IPO. I'm pretty interested in watching IPOs and seeing how companies grow, especially after IPO, but I'm also very leery because it's really, really tricky with Robinhood because so many people are like not only in love with Robinhood as their favorite app ever, but also in love with getting in on IPOs right when they start and easily tripling or doubling our money. So you're gonna have this huge wave of potentially very inexperienced investors investing in a company that has helped them take advantage of that kind of drama going on in the market. All while, economic conditions are not necessarily awesome, and a presidential change, and all this other drama with the Fed, and maybe the housing market, and a bunch of other crazy factors going on at the same time. So I'm interested to seeing how this will play out for Robinhood in the big picture. But I think they've proven that they're good enough at improving their systems, reducing downtimes and things like that, that they will get through this. I'm just really interested to see how it's all gonna hit the bottom line in the coming years. So looking forward very much to hearing what you think about all of this. Are you a Robinhood user? Are you enjoying Robinhood? Does Robinhood make you uncomfortable? Or are you a more traditional investor using older brokerages? Let me know what you think. Let me know who you are. How does this all fit into your kind of schema about thinking about Robinhood and things going forward to their IPO? Oh, also forgot to mention, if you are looking for a brokerage, or if you've been uncomfortable with Robinhood and you're thinking about Webull has extended their offer to the end of the year for 4 free stocks valued up to $3,700. You just need to deposit $100 using the link down below in the description. So if you do that, that will also help our channel continue to be able to provide more content like this for you going forward. Thank you guys very much for your time. Have a great week or weekend. Love you. Talk to you soon.